As the voice of God just informed you, I'm Dylan Siegler, and I head up corporate sustainability at GreenBiz. And so first of all, thanks to Jason J. That was incredible. I am honored to have with me two folks to talk about an issue that I think is front of mind for many of us. Stephen Rothstein, let's see if I can get this right, Managing Director of the Ceres Accelerator for Capital Market Sustainability?
Great.
Something like that? And Mike Pieciak, who is the Treasurer of the state of Vermont. Round of applause for these folks. What is front of mind for many of us in the room here is that we are seeing in the world a campaign against ESG that has come from some on the right. And it's resulted in, at this point, something like 15 states enacting anti-ESG laws. We've got another dozen that are looking at passing such legislation. And that's both a cause and an effect of a larger headwind that we're seeing. Everyone on this stage seems to be using the term headwind today around ESG and what it means to the investing world. So to round out today's keynotes, we want to talk about this, and we want to especially get into how those who believe in the value and the power of ESG, and more specifically, of ensuring that the risks and the opportunities that are involved in making investment decisions can be actually taken into account. How can those of us who care about those things push proactively in the other direction? Stephen, I'd like to start with you. Briefly, tell us about the Freedom to Invest initiative that Ceres launched back in March, and what was the motivation for bringing it to be?
Sure. Yeah, thank you, and thanks to all of you and Joel and everybody. Probably everyone in this room has been working for years and some for decades on the idea that climate is a risk and an opportunity that fiduciaries need to think about and make enormous progress. There are tens of trillions of dollars of assets that are now invested in that way. There are large companies that are moving. So there's clearly a movement. In the last 12 to 18 months, there has been, from my perspective, an irrational backlash. As you say, there are 37 states that have introduced legislation. Several have passed, but it's interesting, even in the red states, for every bill that's passed, 3 have failed. So it's important to keep that in mind. There are a set of hearings in Congress, including, for those of you who may not know yet, Congress has called 7 more hearings. Let me say that again. 7 more hearings in the month of July on ESG, and there's litigation, a variety of things. So, and we started to have meetings, and we didn't want to be the anti-ESG people. That doesn't make sense. And the first rule is, if you're explaining, you're losing. So, but what is the core element of what we're talking about? It's the freedom. It's the freedom to think about risk, whether those are water risk or biodiversity risk or flood risk or others, and of the opportunities, the IRA and the others. So we did some market testing as well, which I'm happy to share, and to have a broad base. And we started, encourage you to take a look. Go to freedomtoinvest.org, and we'd love to have everyone join with us.
Great. And so hearing that, Mike, why was it important for Vermont to get involved in this? And a second question, if I may.
Yeah.
What are you looking to get out of it?
Yeah, well, thank you for that question. Thanks, Dylan. Thanks, everybody, for inviting us today. So why we got involved, before I was the treasurer for the state of Vermont, I was the insurance commissioner. And when you think about insurance, it's all about risk diversification, risk management. And just like Stephen said, if you can't think about those risks freely and work with them and mitigate them and avoid them, then it's really a fundamental thing for financial services, for investing, for insurance. Imagine going back centuries ago and telling Benjamin Franklin that you couldn't consider how close houses were, whether they're wooden or stone, or how far away they were from a fire department. They're just really basic, fundamental things that have been with us for generations and centuries, and we've incorporated them as financial professionals, as citizens, and it's really important to be able to continue to do that going forward when we're managing things like teacher pensions and state employee pensions and firefighter pensions. These are things that are just really too important not to consider those kind of fundamental risks. So what we're hoping to get out of it is really an education for the broader financial professional community, for my colleagues across the country, for average citizens, that these are really important things. They matter to really important people in our society, and we need to be focused on them.
I'll put the same question to you, Steve. What does success look like from Ceres' point of view?
Simply to have a rational conversation. We fundamentally believe that if people think about the risks and opportunities, for example, just to take the insurance example, there's a bill working its way through the Texas legislature now. I think it's gone to the governor's desk. It says, let me say this now with a straight face, that if you're an insurance company and if you think about climate, you can't do business with the state of Texas. I mean, fundamentally, that is the insurance industry's work, to think about risk and opportunities. So we want to have a rational conversation. I'm an incurable optimist. I think if you do that, we'll get to the place, in 2022, 60% of our country had election denialism on the ballot. Today, most people, except for one candidate of one party, think that that was not factually true or a winning political issue. My hope is in 2025 that the country understands that this was a diversion, and we go back to moving the way we continue to move. Even this year, more money has moved to ESG than ever before. And it's because of, again, the risk, the fires, the floods, and the opportunities that we see all the time, including the IRA.
I understand that Ceres did some polling around this before you launched the initiative. Can you talk a little bit about what you learned?
Sure. The extensive polling done and oversampling in more red states, and what we over 1,500 people. And the question is, do you believe you should have the freedom to think about, if you're a company, risks and opportunities? And even the folks of both parties, more extremes on either, over 90% say yes. 90% say yes. Then a separate question is, do you believe that companies can make a profit and do well by their shareholders, but also meet societal's needs in terms of climate issues? Again, in that case, it was over 85% say yes. Third question is, do you want state legislators to telling you what you can and cannot invest in? 3/4 said no. Those are just some examples of that. I'm happy to share more later. So this is based, and again, the freedom to invest is intentionally, if you go to the website, you won't see a lot of green, you'll see a lot of red, white, and blue, because we do think this is patriotic, and we're not going to give that away to the other side for 1 second.
Mike, your peers in finance broadly are in the room, and likely some folks who are in state finance, and further, probably some people who deal in state pensions. And I'm curious what your call to action would be to those peers. Is it simply to sign your name up on the website for Freedom to Invest, or what more can the finance business do?
Yeah, well, again, a great question, because I think it's so important for the individuals that are controlling funds, that are controlling those important investment decisions, to make sure that politics does not creep into those investment decisions. It's too important of a decision to let the sort of issue of the day come in and make short-term decisions that are going to have long-term impacts, when in a year from now, the parties are probably going to move on to some other issue, or the party in particular that we're talking about is going to move on to some other issue of the day. So this is something that we're experiencing in the short term, but we need to be thinking about obviously long-term investing and what those strategies are long-term and all of the risks that we've talked about. So what can you do? I mean, certainly standing up and taking action where you see fit, but I really think the most important thing you can do is to think about the stakeholders that you serve, the stakeholders that make decisions in your organizations or in your communities, and make sure you're having those rational conversations with them about the importance of considering environmental, social, and governance factors, among other things, when making business decisions, when making investment decisions. So that education and educating your key stakeholders is critical.
Mike, another for you. Freedom to Invest is an advocacy move. It's not actually trying to move the needle on legislation, but I'm curious whether there is a move that you see coming in Vermont. How is Vermont approaching this issue from a legislative standpoint? So
I think we talked about the states that have anti-ESG legislation. 37 states, I think, have introduced some form of anti-ESG legislation. Vermont is not one of them. I can't say the same for New Hampshire or Maine. So if you're making your summer plans still for vacation, Vermont would be more than happy to welcome you. And I don't see anything anti-ESG coming down the pike by any means. We're thinking of risk almost on the entirely different end of the spectrum about fossil fuel and the risk that it poses to our pension systems. We're not talking about divesting immediately. We're not talking even about divesting completely in the long term, but we're talking about understanding the risk that we have of exposure to the fossil fuel industry and making sure that we're mitigating that risk over time, doing advocacy and engagement over time where appropriate. So those are the things that we're focused on, fortunately. I think they're much more rational conversations to be having about the long-term success of our pension funds.
Steve, does Ceres have a dog in that race in terms of actually trying to get legislation passed? What are you watching as you look across the state legislative landscape? So
first is just on what Mike was saying, we think that everyone, whether every company and every investor, should have a transition plan on a variety of topics, but on climate, and not just at 2050, because the reality is the average CEO is there 6.7 months, 6 years, 7 months, so that's going to be several CEOs in the future. But where's the company or the investment firm want to be in 2025, in 2030, in 2035? And to decarbonize your portfolio over time, and to look at those risks, and to take advantage of those opportunities. If you're selling spark plugs, will those be around in 10 years with the EVs? Or what are the new technologies? So looking at those risks and opportunities. And we're very active at the state and federal level. We're a 501c3, not a C4, so not lobbying directly, but within what's allowed. And we're very involved with educating legislators. I mean, I'll tell you a story. There was a state that was introducing one of these anti-ESG bills. We went to educate legislators. We got a trade association and others. The day before the hearing, they canceled it because once they knew more, they decided not to go forward. Now, that's not going to happen in every state, but then there are other conservative states. One of the things that's important to know is that these are costing these states an enormous amount of money. I'll give you an example. Wharton did a study, and one of our colleagues from Wharton is here, that looked at Texas. And there were 6 banks that were allowed to bid for municipal bond work. The mayor was here earlier, and municipal bond work. 5 of them had ESG policies, so they were banned temporarily. The one that was left had higher rates. So the state of Texas taxpayers are going to spend up to $523 million more just in interest cost. So we want to so we're educating legislators at the federal and state level, also supporting things like Department of Labor. I was talking earlier about retirement funds, and trying to ensure that there is these choices in the future.
We heard from another speaker on this stage earlier that all of us who perhaps live in liberal bubbles or even independent bubbles should befriend a Republican. I'd love to get your take on that, each of you.
Well, my dad is Republican and my mom's a Democrat. I'm a Democrat, so I used to listen more to my dad when I was a young kid. I don't know, it was more impactful on me, but I sided with my mom long term. But in all seriousness, I worked prior to being treasurer for those 6 years under a Republican governor. So, in Vermont, we have this bipartisanship. I mean, we have sort of the extremes as well. But it's so important, I think, to break through that political, wall. I mean, it's almost like our religion now, politics, that when my parents got married, one was Irish, one was Polish. They'd never married out of their ethnic group, but their parents said, well, at least they're both Catholic. And I think now you wouldn't really care what the religion is of your children as long as they're both Democrats or as long as they're both Republicans. So I think that's very true, and we need to break through that. And the only way you can do it is through relationships, through conversation. I was with a speaker earlier this week that said, make sure you know who your neighbors are. If you don't know who their names are today, make sure when you go home, you introduce yourself to them and start to build a relationship among your community.
Yeah, I agree with that, and I agree with what Bob Eccles said. And I would encourage all of us, let me give you just a very brief thought exercise. Imagine you're all a Green fin in 2025, okay? it can either be that all of us decide in the audience, listen, this is an issue that's nice, but I have a lot of other work to do to sell my product or service. I don't want to stick my head up. I don't want to get what Disney has happened to me. I'm going to let somebody else fight this. That's one example. The other one is that we all decide to get involved. The future of this industry is up to literally the people in this room, because you're probably the most outspoken folks. So I hope all of us reach out to people, Democrats, Republicans, all kinds of folks, that if everyone here writes a letter to the editor or does social media or an op-ed or signs a petition, whatever you want to do, that I think what Greenfin in 25 will be like will be determined by what each of us do in the coming months.
And we'll leave it there. Thanks very much.
Thank you.